There is a part of the financial system most people never think about. It doesn't trend on social media. It doesn't spark dinner table arguments. It doesn't create headlines that feel personal. And yet, when something begins to break there, the damage almost always spreads everywhere else. Long before stock markets panic, long before layoffs make the news, long before the word recession enters everyday conversation, the signal appears quietly, in numbers that don't feel dramatic, in movements that look technical, boring, and distant. This episode begins there, not with fear, not with predictions, but with a system that exists almost entirely on trust, because at the core of every modern economy is a promise that money lent today will be returned tomorrow, a promise that stability will last long enough to matter, a promise that the future, while uncertain, will at least be functional. That promise lives inside the debt market, and more specifically, inside government bonds. Most people know them only by reputation. Safe, boring, low risk. They are described as the place money hides when everything else feels dangerous, the anchor, the baseline, the calm center of the financial universe. But safety, in systems built on trust, is never permanent. It's conditional. And the moment conditions start to shift, the first cracks rarely appear where people are looking. They appear where assumptions live. This story isn't about traders staring at charts. It isn't about timing the market. It isn't even about investing. It's about what happens when the quietest part of the system starts to behave differently. Because when the most trusted asset begins to wobble, it isn't a market event, it's a psychological one. The asset that isn't supposed to move. Government bonds exist to do one thing: absorb uncertainty. When people don't know what will happen next, money flows into them. When fear rises, bonds are supposed to stabilize. When chaos appears elsewhere, they are meant to hold steady. They represent faith in continuity, faith that governments will exist tomorrow, faith that taxes will be collected, faith that promises made today will be honored later. That faith is why bonds are often described as risk-free, not because nothing can go wrong, but because nothing is supposed to. And that expectation matters, because systems don't break only when something fails. They break when assumptions stop holding. When bonds start behaving in unexpected ways, rising when they should fall, falling when fear increases, demanding higher compensation for trust. Something deeper is happening, something structural, something psychological. The system is asking a question it never needed to ask before. How certain are we, really? Yield is a message, not a number. Most people never hear the word yield outside of finance, but yield is not a technical detail. It's a signal. It represents how much compensation lenders demand to trust the future. When yields are low, confidence is high. When yields rise, trust becomes more expensive. And when yields behave erratically, it's often because belief itself is unstable. This isn't about inflation alone. It isn't just about interest rates. It's about time, about how far into the future people feel comfortable making promises. Short-term trust and long-term trust are not the same thing. And when those two drift apart, the system reveals its anxiety. That's what the bond market quietly measures, not optimism, not hope, but tolerance for uncertainty. The curve that reveals. Fear. There is a shape economists watch obsessively. It doesn't show emotion, it doesn't tell stories, but it reflects belief with brutal honesty. The yield curve. It compares how much trust costs over different lengths of time. Normally, the further into the future you lend money, the more compensation you expect. Time introduces risk. Uncertainty accumulates. So, long-term yields should be higher than short-term ones. When that relationship flips, when short-term trust becomes more expensive than long-term trust, the system is saying something uncomfortable. It's saying the near future feels more dangerous than the distant one. That conditions today feel more fragile than conditions years from now. That is not a normal belief, and yet it keeps happening. Not because markets are broken, but because expectations are. The bond market isn't predicting collapse, it's pricing discomfort. And discomfort, when sustained, changes behavior long before anything breaks. Fragility without collapse. Here's the mistake most people make. They wait for events. They wait for crashes. They wait for announcements. They wait for permission to worry. But systems rarely fail all at once. They degrade. They absorb stress quietly. They adapt. They bend. And while they do, individuals feel pressure without explanation. Costs rise without a clear villain. Decisions feel riskier than before. Planning becomes harder, even if income hasn't changed. That's what fragility looks like in its early form. Not panic, but unease. And the bond market often feels that unease first, because it prices trust, not stories. Why this matters to people who never buy bonds. You don't need to own bonds for them to shape your life. Interest rates ripple outward. Mortgage costs, credit availability, business expansion, hiring decisions. But more importantly, they shape behavior. When borrowing becomes expensive, risk-taking slows. When trust costs more, flexibility disappears. When uncertainty is priced aggressively, caution becomes default. This doesn't feel like crisis. It feels like hesitation, like doors closing quietly instead of slamming shut. And because nothing dramatic happens, people internalize the pressure. They blame themselves. They think they're falling behind. They don't realize the system is tightening, slowly, deliberately, long before it announces anything official. The illusion of stability. One of the most dangerous beliefs in modern life is that stability looks calm. Often, it looks tense. Systems under stress don't scream. They conserve energy. They restrict movement. They raise barriers. They demand more proof, more collateral, more certainty. From the outside, everything still functions. But inside, the cost of participation increases, and those costs are not evenly distributed. People with buffers adapt. People without them feel trapped. Not because they failed, but because trust became expensive at the wrong moment. What this episode is really about. This is not an episode about predicting markets. It's about recognizing signals, not to act impulsively, but to understand pressure before it becomes personal. Because when people finally notice something is wrong, the system has usually been whispering it for a long time. In the parts no one watches, in the assets no one talks about, in the quiet math of trust. And once you understand where those signals come from, you stop waiting for collapse to justify clarity. You begin building resilience earlier, calmer, more deliberately, before anything breaks. There is a moment in every system when stability stops being free. Nothing dramatic announces it, no alarms sound, no headlines explain it clearly. But the cost of trust quietly rises, and when that happens, everything downstream begins to feel tighter, even if nothing appears broken. Trust in financial systems is not emotional, it's transactional. It has a price, and that price changes based on belief. When lenders demand more compensation to part with their money, they aren't predicting disaster. They are expressing discomfort. Discomfort with inflation, discomfort with policy, discomfort with uncertainty that no longer feels temporary. This is where the story deepens, because rising yields aren't just a market movement, they're a verdict on how believable the future feels, the central role of control. In modern economies, trust is heavily managed. Central banks exist to shape it, to stabilize expectations, to keep belief aligned enough for systems to function. Interest rates are not just tools to control inflation. They are signals sent into the collective psyche. Lower rates say, the future is manageable, take risks. Higher rates say, slow down, be careful. But when rates stay high for longer than expected, or rise when confidence already feels fragile, the message changes. It becomes less about discipline and more about doubt. Not doubt that inflation exists, but doubt that it can be controlled without damage. And markets listen closely to that doubt. Why long-term trust is harder to sustain. Short-term problems are easy to imagine. A bad year, a slowdown, a temporary spike in prices. Long-term uncertainty is different. It forces people to imagine a future where rules may change, costs may rise, and assumptions may no longer hold. When investors demand higher yields on long-term bonds, they are not reacting to today's news. They are reacting to the absence of clarity about tomorrow. They are asking, will growth be strong enough to justify this debt? Will inflation erode returns faster than expected? Will political pressure interfere with policy discipline? Will stability be preserved or improvised? None of these questions require collapse to matter. They only require doubt, and doubt, once embedded, raises the cost of everything. The quiet redistribution of risk. When trust becomes expensive, risk doesn't disappear, it moves. Large institutions adapt quickly. They hedge, they renegotiate terms, they shift exposure. Individuals don't have that luxury. They absorb risk passively, through higher borrowing costs, fewer opportunities, and delayed decisions. A mortgage becomes harder to justify. A business expansion gets postponed. A career move feels too risky. Nothing is officially wrong, but everything feels heavier. This is how systemic pressure becomes personal, without ever announcing itself. Why stability starts to feel unfair. One of the strangest outcomes of rising trust costs is resentment, not toward markets, not toward policy, but toward oneself. People begin to feel like they missed something, like they made the wrong choices, like stability was available, just not to them. But the system didn't break, it recalibrated. And recalibration always favors those with time, capital, and flexibility. Those without buffers feel punished, not because they failed, but because entry costs quietly increased. That's why economic tension often shows up emotionally before it shows up financially. Anxiety rises, confidence falls, planning feels fragile. The numbers don't explain it, but the pressure is real. The myth of the all-clear signal. Most people wait for permission to act. They want a signal that things are safe again. Lower rates, clear guidance, positive headlines, but systems rarely return to old conditions. They move forward under new constraints. The bond market doesn't ring a bell when trust becomes affordable again. It adjusts gradually. And those who wait for clarity often find that the cost of waiting was higher than the risk of acting deliberately, not recklessly, but intentionally. Why this moment feels different. Every cycle has uncertainty, every era has doubt. But what makes moments like this unique is duration. Uncertainty that lingers changes behavior. People stop planning far ahead. They shorten time horizons. They favor liquidity over growth. This isn't fear-driven panic. It's cautious adaptation. And while adaptation looks sensible individually, it compounds collectively. Less investment, slower expansion, muted optimism. The system doesn't collapse. It cools. And cooling is harder to notice than breaking. The cost of waiting for proof. Here's the uncomfortable truth. By the time certainty returns, opportunity has often already shifted. Lower rates usually arrive after damage has been done. Stability announcements come after stress has reshaped behavior. Those who understand signals early don't act because they are afraid. They act because they are aware. Awareness doesn't demand drastic change. It demands alignment. aligning decisions with reality as it exists, not as it's officially declared. What resilience actually looks like. Resilience is not predicting outcomes. It's reducing dependence on perfect conditions. It's flexibility, optionality, margin. People often think resilience requires dramatic action. It doesn't. It requires understanding where pressure comes from and how it travels. When trust is cheap, leverage feels safe. When trust is expensive, simplicity matters. This isn't ideology, it's adaptation. Why the quiet signals matter. Most the bond market doesn't shout, it whispers. It adjusts numbers that most people never see, but live with every day. When those numbers shift persistently, the message is not run. It's reconsider. Reconsider timelines, reconsider assumptions, reconsider how much certainty you're relying on, not because collapse is imminent, but because pressure is already present. The transition point. Every system has a moment where the question changes. It stops being, is this safe, and becomes, how safe does this need to be to justify the cost? That's where we are, not in crisis, but in repricing. And repricing affects everyone, whether they understand it or not. What comes next? In the next part, we'll look at how these signals shape behavior at scale. Not just markets, but governments, companies, and individuals making decisions under quiet pressure. Because once trust becomes expensive, everyone adapts. Some consciously, most unconsciously, and that difference matters more than timing any market ever could. When systems feel pressure, they don't absorb it evenly, they redirect it. This is one of the least discussed truths about modern economies. Stress does not disappear, it migrates. And it almost never moves upward, it moves downstream, from institutions to individuals, from balance sheets to behavior, from policy rooms to living rooms. By the time pressure becomes visible to the public, it has already passed through multiple layers of decision-making. Each layer softens it just enough to remain functional, while passing the remainder forward. This is how systems survive without ever feeling stable. Institutions don't panic, they adjust. Large institutions are built for uncertainty. They have buffers, they have access, they have optionality. When trust becomes expensive, institutions don't freeze, they reprice. Lending standards tighten, approval criteria shift, time horizons shorten. No announcement is required. The rules don't change, the interpretation of them does. Risk departments become more conservative. Forecasts adopt wider error bands. Capital becomes selective. From the outside, everything looks the same, but the threshold for participation quietly rises. The subtle mechanics of risk transfer. When institutions reduce exposure, they rarely say, "We're taking on less risk." Instead, they say, "We're prioritizing quality. We're focusing on fundamentals. We're being prudent." Those phrases sound responsible, and they are. But responsibility in systems has a direction. When banks lend less, businesses borrow less. When businesses borrow less, expansion slows. When expansion slows, hiring becomes cautious. No one causes harm intentionally, but harm accumulates anyway. This is how risk moves without ever being named. Why access shrinks. Before opportunity disappears, opportunity doesn't vanish first, access does. Loans become harder to qualify for, terms become less forgiving, mistakes become more costly. This is why economic slowdowns often feel unfair, not because outcomes change, but because entry points narrow. People who already have assets continue operating. People who need permission to move forward stall. Not because they're less capable, but because the system demands more certainty than they can provide. The psychological weight of conditional approval. One of the most damaging effects of downstream pressure is internalization. When access tightens, people assume fault. They think, "I'm not ready. I should wait." I need to be safer. Sometimes that's true. Often it's just pressure wearing a personal mask. The system doesn't explain itself, so people explain it to themselves. And that explanation usually includes self-blame. How time horizons collapse. As pressure moves downstream, time compresses. Institutions shift to quarterly thinking. Businesses shift to monthly survival. Individuals shift to immediate security. Long-term planning becomes risky, not because the future disappears, but because confidence in it erodes. This is how systems lose momentum without ever crashing. Everyone becomes cautious at the same time, and caution, when synchronized, becomes stagnation. The false comfort of resilience. Resilience is often framed as toughness, enduring hardship, pushing through uncertainty, holding on. But endurance without adaptation is fragility in disguise. True resilience is responsiveness. It's noticing where pressure is coming from and adjusting before it demands sacrifice. Institutions do this instinctively. Individuals are taught to wait. Why liquidity becomes emotional liquidity isn't just financial, it's psychological. When access to money feels uncertain, people cling to flexibility. They delay commitments, they hoard cash, they avoid irreversible decisions. This behavior looks prudent, and it is, but en masse, it slows everything. Investment drops, consumption cools, growth narratives weaken. The system interprets this as confirmation of risk and tightens further. A feedback loop forms, not from fear, from caution. The invisible contract. Everyone in modern life is built on an unspoken agreement. If you plan responsibly, the system will meet you halfway. Education leads to opportunity. Work leads to stability. Patience leads to progress. When trust becomes expensive, that agreement feels less reliable. Not broken, but conditional. People still try. They just hesitate. And hesitation compounds. Why this feels personal. Before it feels systemic. Downstream pressure manifests as individual stress, burnout, decision fatigue, chronic uncertainty. People don't say the yield curve is inverted. They say, I can't afford to make a mistake. They don't talk about interest rate policy. They talk about feeling behind. This is the emotional translation of macro pressure. The system speaks in numbers. People feel it in nerves. The quiet shift in identity. When stability feels conditional, identity changes. People become more conservative, not politically, but existentially. They prioritize safety over exploration, security over growth, predictability over potential. This isn't weakness, it's adaptation to pressure. But adaptation has a cost. It narrows possibility. Why waiting for relief rarely works. Many people wait for pressure to lift, for rates to fall, for clarity to return, for permission to plan again. But systems rarely restore previous conditions. They evolve forward. Relief doesn't mean reversal. It means a new equilibrium, often at a higher cost. Those who wait for the old rules to return often miss the chance to adapt to the new ones. The real risk of not seeing pressure. The danger isn't panic, it's misattribution. Believing that personal stress is personal failure, believing that hesitation is weakness, believing that caution means something is wrong with you. In reality, pressure is systemic, and systems don't announce when they change. They just behave differently. What awareness offers, understanding how pressure moves downstream, doesn't make it disappear, but it changes how you interpret it. Instead of asking, "What's wrong with me?" you ask, "What's tightening around me?" That shift matters because it restores agency, not by ignoring reality, but by responding to it deliberately. Where this leads, in the next part, we'll explore how governments and policymakers respond to these dynamics, and why their solutions often stabilize systems while leaving individuals feeling exposed. Because when pressure moves downstream, responsibility rarely follows, and that gap shapes everything that comes next. Perfeito. Aqui está o episódio 6, parte 4, mantendo o mesmo tom narrativo, progressão lógica e 1.400 palavras, pensado para narração contínua e retenção longa. Episode 6, Part 4, Stability on Paper, Pressure in Reality. There is a moment when official language stops matching lived experience. Charts look fine, statements sound calm, institutions declare progress. And yet people feel more constrained than before. This gap is not accidental, it's structural, because the tools designed to stabilize systems are not designed to stabilize individuals, they stabilize function. And function can continue even when pressure increases. What policy is actually trying to do? When policymakers respond to economic strain, their primary goal is not comfort, it's continuity. They aim to keep markets operating, to prevent cascades, to maintain credibility. Success is defined narrowly. If banks remain solvent, policy worked. If inflation slows, policy worked. If markets don't panic, policy worked. Whether people feel secure is secondary, not because it doesn't matter, but because it's harder to measure. Pressure is invisible in aggregate data. Why official stability feels. Hollow economic indicators are averages. They smooth out extremes. They hide distribution. A stable system can still feel unbearable to large segments of the population. Employment numbers can look strong while job quality deteriorates. Inflation can fall while costs remain elevated. Growth can continue while opportunity narrows. From the top down, things appear under control. From the inside out, everything feels conditional. This is how stability becomes misleading. The communication gap policy language is cautious by design. Reassurance without commitment, optimism without timelines, control without promises. This language protects credibility, but it also creates distance. People hear confidence, but don't feel relief, because relief requires margin, and margin is exactly what tightening removes. Why pain is tolerated. Longer than instability, institutions will tolerate discomfort as long as systems function. Individuals cannot. But the system prioritizes its own survival. This is why policy often stays restrictive longer than people expect. Because easing too early risks credibility, and credibility once lost is expensive to rebuild. So pressure continues, not because policymakers don't see it, but because they're balancing different risks. One visible, one invisible. The asymmetry of adjustment. When policy tightens, effects are immediate. Borrowing costs rise, spending slows, behavior changes. When policy eases, effects are delayed. Confidence takes time to rebuild. Opportunity doesn't reopen instantly. Risk tolerance recovers slowly. This asymmetry means pressure accumulates faster than relief arrives. And that lag is where frustration lives. Why doing the right thing feels punishing. People who follow the rules feel this gap most acutely. They saved, they planned, they avoided excess, and yet they feel constrained. Meanwhile, those with assets benefit from higher yields. Those with leverage locked in lower rates earlier. The system didn't reward responsibility equally, it rewarded positioning. This is one of the hardest truths to accept, because it challenges the belief that discipline guarantees security. The shift from growth to preservation. As pressure persists, priorities change. Growth narratives fade. Preservation takes center stage. People stop asking, how do I get ahead? They ask, how do I not fall back? This shift doesn't show up in GDP, but it reshapes behavior everywhere. Less entrepreneurship, fewer risks, more caution. The economy still moves, it just moves differently. Why official reassurance loses power words, lose impact when lived experience contradicts them. Reassurance without relief feels dismissive. Optimism without access feels hollow. People don't need to be told things are stable. They need to feel space to breathe. When they don't, trust erodes quietly, not in institutions, but in narratives. The problem with waiting for alignment. Many people wait for signals to line up, for headlines to match feelings, for policy to acknowledge pressure. But alignment often arrives too late to help individuals. By the time discomfort is officially recognized, adaptation has already been forced. People have downsized, delayed, withdrawn. The system catches up to the feeling, not the other way around. How responsibility gets fragmented. One of the most disorienting aspects of this phase is diffusion of responsibility. No single actor causes the pressure. Policy responds to data. Institutions respond to policy. Individuals respond to institutions. Everyone is rational. And yet the outcome feels irrational. This is how systems create stress without villains. Why this isn't about blame. It's tempting to look for someone at fault, but blame doesn't restore agency. Understanding does. Pressure isn't evidence of failure, it's evidence of transition, a system moving from one equilibrium to another, and transitions are always uncomfortable. What people miss in this phase. The mistake many people make is assuming this pressure is temporary noise, something to endure until normal returns. But normal rarely returns unchanged. Conditions shift, rules evolve, costs reset. Those who adapt early don't escape pressure. They reposition within it. The difference between endurance and alignment. Endurance is surviving pressure. Alignment is adjusting to it. Endurance exhausts. Alignment conserves. The system won't announce when alignment is required. It will just continue operating under new constraints, and individuals who notice early gain something subtle but powerful: choice. Where this is going. In the next part, we'll examine how individuals can interpret these signals without becoming reactive, how to build margin, flexibility, and psychological resilience without waiting for permission. Because while systems move slowly, personal decisions don't have to, and clarity, once earned, compounds. Pressure changes how people think, not dramatically, not obviously. It narrows perspective. When conditions feel uncertain for long enough, the mind shifts into protection mode. Decisions become smaller, time horizons shrink, risk feels heavier than reward. This is not panic, it's adaptation, but often the wrong kind. Because while systems adjust structurally, people often adjust emotionally. And emotional adaptation without clarity leads to paralysis. Why most people misread this phase? When the ground starts moving, most people look for stability in the wrong places. They look for certainty. They look for authority. They look for reassurance. But clarity doesn't come from certainty. It comes from understanding constraints. This phase isn't about predicting what happens next. It's about recognizing what has already changed. And the biggest change isn't economic, it's psychological. The cost of mental rigidity. When pressure persists, people cling to old frameworks. They keep using rules that worked in different conditions. Wait until rates drop. Things will normalize. I'll act when it's safer. But safety is contextual. What felt safe in one environment may be risky in another, and vice versa. Rigid thinking doesn't protect you. It delays adjustment. The difference between fear and signal. Fear is emotional noise. Signals are structural patterns. The challenge is that sustained pressure makes them feel the same. People confuse discomfort with danger. They confuse uncertainty with threat. But not all uncertainty requires retreat. Some uncertainty demands recalibration. Why optionality becomes the real asset. In times like this, the most valuable thing isn't return, it's optionality. The ability to choose, to pivot, to respond instead of react. Optionality doesn't mean avoiding commitment. It means avoiding irreversible commitment. This is where clear thinking matters most. The myth of the perfect move. Many people freeze because they want to make the right decision, the optimal decision, the perfectly timed move. But optimality is fragile. It requires stable conditions. In shifting environments, robustness matters more than precision. A good enough decision that preserves flexibility beats a perfect decision that traps you. How pressure distorts risk perception. Under sustained pressure, people overestimate downside and underestimate resilience. They imagine worst-case scenarios vividly. They discount slow, positive progress. This imbalance creates indecision, not because people lack courage, but because they lack context. They feel pressure but don't understand its source, and unexplained pressure always feels personal. Reframing the situation. Here's the reframing that changes everything. This is not a moment that demands boldness. It demands alignment. Alignment between expectations and reality, between timelines and conditions, between effort and leverage. Once aligned, decisions feel lighter, not easier, clearer. The trap of overcaution. Caution is rational, but excessive caution becomes risk. When people delay too long, costs rise quietly. Opportunities shift, entry points move, flexibility erodes. By the time confidence returns, options have narrowed. This is why waiting for relief often backfires. Relief rarely arrives first. Adjustment does. Why small moves matter more. Now, this is not a phase for dramatic reinvention. It's a phase for incremental positioning. Small adjustments compound, reducing fixed obligations, increasing liquidity, diversifying timelines. These moves don't feel heroic, but they create breathing room, and breathing room restores clarity. Psychological margin is not optional. Most people think margin is financial. It's not, it's psychological. The ability to think without urgency, to decide without fear, to plan without exhaustion. Without margin, even good options feel risky. With margin, even uncertainty feels manageable. How to recognize false urgency. Pressure creates urgency, but not all urgency is real. Some of it is internalized system stress. You feel like you must act now, or like you must wait indefinitely. Both are extremes. Clear thinking lives in the middle. Ask, is this decision reversible? Does waiting improve clarity, or just delay discomfort? Am I responding to facts or to pressure? These questions don't give answers. They restore agency. Why comparison becomes dangerous. During transitional phases, comparison is toxic. Others appear to be doing better, taking risks, moving forward. But you don't see their constraints. You only see outcomes. Comparing trajectories during instability leads to distorted conclusions. Focus on positioning, not pace. The role of acceptance. Acceptance is not surrender, it's clarity. Accepting that conditions have changed frees you from waiting for permission to adapt. It allows you to operate within reality instead of hoping reality reverts. This is where resilience actually begins. Thinking in layers, not outcomes. Clear thinking during pressure means shifting focus from outcomes to layers. What can you control? What can you influence? What must you adapt to? Layered thinking prevents overwhelm. It replaces anxiety with structure. Why? This phase produces quiet winners. The biggest gains during transitional periods don't come from bold bets. They come from quiet alignment. People who reduce friction, who preserve flexibility, who maintain momentum without forcing outcomes. They don't look impressive in the moment, but they're positioned for whatever comes next. What this is really about, this phase, is not about markets. It's about perception. Those who see pressure as personal retreat, those who see pressure as structural adjust, and that difference compounds. The inner shift that matters most. The most important decision right now isn't external, it's internal. Stop asking, when will this end? Start asking, how does this work now? That shift transforms uncertainty from threat into terrain, and terrain can be navigated. Where we go next? In the next part, we'll explore how long transitions actually last, and why impatience causes more damage than delay. Because endurance isn't about waiting it out, it's about pacing yourself through it. Perfeito. Seguindo o arco narrativo e mantendo-me 1400, 1500 palavras. Aqui está o episódio 6, parte 6, preparado para a narração contínua, com foco em tempo, fadiga e desgaste invisível. Episódio 6, parte 6, The Slow Fatigue. No one talks about pressure. Doesn't just change decisions, it changes stamina. Not all at once, not dramatically, but steadily. At first, people adapt. They tighten budgets, they delay plans, they tell themselves it's temporary. But when pressure lasts longer than expected, something quieter begins to erode. Energy. Why time is the hidden variable. Most financial stress models assume short cycles, a shock, an adjustment, a recovery. But prolonged transitions don't behave like shocks, they stretch. And stretched pressure doesn't feel urgent, it feels exhausting. There's no crisis moment to respond to, no clear bottom to brace against, just ongoing constraint. And the mind isn't built for indefinite vigilance. The cost of staying alert, too long. When uncertainty persists, people stay mentally on. They monitor spending constantly, they second-guess decisions, they rehearse contingencies. This state feels responsible, but it's draining. The brain treats prolonged uncertainty like unresolved danger. Stress hormones don't spike, they hum. And that hum slowly depletes focus, motivation, and optimism. Why burnout isn't just for work. Burnout isn't limited to jobs. You can burn out on decision-making, on vigilance, on caution. When every choice carries weight, even small decisions feel heavy. People stop planning not because they don't care, but because planning feels futile. This is how disengagement begins. The emotional shift. No one notices. At first, people feel anxious. Later, they feel numb. Numbness is not relief, it's conservation. The mind lowers emotional investment to preserve energy. Goals feel distant. Ambition softens. Curiosity fades. This isn't apathy. It's fatigue wearing a neutral face. Why long transitions feel harder than crises. Crises demand action. Transitions demand patience. Action mobilizes energy. Patience consumes it. During crises, people feel united against a threat. During transitions, people feel alone with uncertainty. There's no countdown, no rallying cry, just endurance, the quiet decline of initiative. As fatigue builds, initiative drops, not suddenly, subtly. People stop exploring options, they stop revisiting plans. They default to maintenance. Maintenance keeps things running, but it doesn't move them forward. This is how long transitions stall momentum without ever forcing collapse. Why just push through fails. The instinctive response to fatigue is effort. Try harder, be more disciplined, stay focused, but fatigue doesn't respond to effort, it responds to relief. Without relief, effort accelerates depletion. This is why pushing through prolonged pressure often backfires. The difference between endurance and sustainability. Endurance is finite. Sustainability is adaptive. Endurance says, I'll hold on until this passes. Sustainability asks, how do I live within this longer than expected? Most people default to endurance, and that's where exhaustion sets in. How systems outsource fatigue. Institutions don't get tired. They rotate staff, they adjust models, they rebalance portfolios. Fatigue is outsourced downstream, to individuals, to families, to workers, to decision makers without buffers. This is why prolonged transitions feel personal, because fatigue is personal. The danger of normalizing exhaustion. When pressure becomes normal, exhaustion becomes invisible. People stop naming it, they stop addressing it, They assume it's just how things are now. This normalization is dangerous because unacknowledged fatigue leads to poor decisions, not reckless ones, avoidant ones. Avoidance as a coping strategy. Under prolonged stress, avoidance feels protective. Delay decisions, ignore statements, postpone reviews. Avoidance reduces immediate discomfort, but it increases long-term uncertainty, and uncertainty feeds fatigue. The cycle deepens. Why people misjudge their capacity. Fatigue distorts self-assessment. People think they're weaker than they are. They confuse tiredness with inability. I can't handle more right now. I'm not ready to decide. I need things to calm down first. Sometimes that's true. Often it's fatigue talking, not reality. Rest isn't the same as recovery. Rest helps, but rest alone doesn't fix structural pressure. A weekend off doesn't restore margin. A vacation doesn't change constraints. Recovery requires adjustment, not escape. This is why people return from breaks feeling refreshed, then quickly overwhelmed again. The environment hasn't changed. The importance of reducing cognitive load. During long transitions, the goal isn't optimization, it's simplification. Fewer decisions, clearer rules, lower mental overhead. Reducing cognitive load conserves energy, and energy is the limiting factor now, not intelligence or effort. Why small wins matter more than ever. Progress feels invisible during fatigue, so it has to be made visible. Small wins restore agency, not because they change everything, but because they counter helplessness. Momentum isn't about speed, it's about continuity, reframing the goal. This phase isn't about thriving, it's about maintaining coherence, keeping values aligned with actions, keeping decisions intentional, even if modest. That coherence prevents drift, and drift is what fatigue feeds on. The risk of letting the system decide for you. When people are tired, they default. They accept conditions passively. They postpone agency. The system doesn't exploit this maliciously. It simply continues, and continuation without intention is how people wake up years later wondering what happened. Why? Awareness is protective. Naming fatigue changes its impact. It turns confusion into information. Instead of asking, "What's wrong with me?" you ask, "What's wearing me down?" That shift opens options. You don't need to fix everything. You need to stop leaking energy. Preparing for the next phase, transitions don't last forever, but they last longer than expected. Those who pace themselves arrive with capacity. Those who sprint early arrive depleted. This part of the journey isn't visible, but it's decisive. Where we go next. In the next part, we'll explore what happens when pressure finally forces visible change, and why those moments reward preparation, not prediction, because transitions end quietly, but their outcomes don't. Pressure doesn't last forever, but it doesn't end cleanly either. It accumulates, it concentrates, and then, quietly, it transforms into change. Not with an announcement, not with a turning point everyone recognizes, but through a series of decisions that suddenly feel unavoidable. The moment people are waiting for never arrives. Most people expect a signal, a clear shift, a headline, a policy reversal, something that says, now it's different. But transitions rarely provide permission. They end when behavior changes, when what once felt optional becomes necessary. That moment doesn't feel dramatic, it feels practical. Why change feels sudden after long stagnation. From the outside, shifts look abrupt. Markets move, spending patterns change, opportunities reappear. But underneath, pressure has been reshaping behavior for months or years. When the surface finally moves, it's because the foundation already did. This is why those unprepared feel blindsided, and those aligned feel ready. The psychology of the breaking points aren't emotional explosions, they're emotional simplifications. People stop negotiating with uncertainty. They stop hoping for better conditions. They accept what is. Acceptance isn't resignation, it's resolution, and resolution enables action. Why early adapters look lucky. When conditions change, some people move quickly. They seize opportunities, they adjust positions, they step into gaps. Others hesitate to enter. From the outside, it looks like timing. From the inside, it's readiness. They weren't predicting change, they were positioned for it. The cost of waiting for certainty. Certainty is a lagging indicator. By the time it appears, opportunities are already priced in. The people who wait for clarity often arrive late. Not because they're cautious, but because they misunderstand how transitions resolve. Clarity follows action, not the other way around. Our systems respond when pressure peaks. When pressure becomes visible, systems respond quickly. Policies adjust, capital reallocates, narratives shift. But these responses favor those already flexible, those with margin, those with options, those who didn't exhaust themselves waiting. This is why fatigue matters so much. It determines who can move when movement matters. Why change feels unfair. Transitions expose asymmetries. Some people benefit from shifts that hurt others, not because of intelligence or effort, but because of starting position. This feels unjust, and emotionally it is. But understanding this isn't about acceptance, it's about realism, because fairness doesn't govern transitions, structure does. The moment risk changes direction. At some point, the biggest risk flips. What was once dangerous becomes necessary. Holding back becomes costly. Waiting becomes exposure. This inversion confuses people. They keep avoiding yesterday's risks while stepping into today's. Those who notice the inversion early gain advantage. Those who don't feel trapped. Why preparedness looks boring. Preparedness isn't dramatic. It's quiet, lower leverage, flexible timelines, clear priorities. None of this feels exciting. But when change arrives, excitement is irrelevant. Capacity matters more. The role of emotional regulation. During visible change, emotions spike again. Hope returns. Fear shifts. Urgency resurfaces. This is dangerous because emotional volatility leads to reactive decisions. Those who maintained regulation through pressure can think clearly now. Those who didn't are vulnerable to overcorrection. Overreaction is the new risk. After long restraint, people overextend. They rush to make up for lost time. They take on too much, commit too fast, assume momentum will last. This is how recoveries punish impatience. The discipline that sustained you through pressure is the same discipline that protects you during release. Why alignment beats speed. Speed feels powerful during change, but alignment wins. Aligned decisions compound. Misaligned decisions unravel. Those who know their constraints move deliberately. Those chasing momentum stumble. Change rewards coherence, not aggression. The subtle advantage of those who adjusted early. Early adjustment didn't feel rewarding. It felt lonely. Others questioned caution. Momentum looked tempting elsewhere, but early adjusters preserved energy. Now they can deploy it. This is the payoff phase, not in money, in capacity, the myth of the perfect exit. Many people wait to exit pressure cleanly, to reset, to start fresh. But transitions don't offer clean exits. They offer continuity with new conditions. Those waiting for a fresh start miss the moment to step forward. Change doesn't erase the past. The new phase doesn't invalidate what came before. Fatigue remains, scars remain, lessons remain. Ignoring that history leads to repeating mistakes. Integration matters, why reflection must happen. Now, once change begins, pace increases, reflection becomes harder. This is the last moment to ask, what did pressure teach me? What drained me unnecessarily? What kept me stable? These answers guide future resilience. The quiet reset of expectations. Change resets benchmarks. What felt normal before won't return unchanged. Costs, behaviors, assumptions all shift. Those who cling to old expectations feel perpetually disappointed. Those who reset feel grounded. The decision that actually matters. The most important decision during change isn't tactical, it's narrative. Do you see this as recovery or as reconfiguration? Recovery implies return. Reconfiguration implies adaptation. Only one matches reality. Where we go next. In the final part, we'll bring everything together. How to carry forward clarity, margin, and agency into whatever comes next without needing certainty, prediction, or control. Because the real outcome of pressure isn't economic. It's cognitive. When pressure finally eases, it doesn't disappear. It lingers, not in the environment, but in people, in habits, in expectations, in how they think about risk, security, and control. This residue matters more than the conditions that created it, because pressure changes who you become while navigating it. Why relief feels strangely unsettling. Many people expect relief to feel liberating. Instead, it often feels disorienting. Decisions return, options reappear, urgency fades, and without urgency, direction feels unclear. Pressure gave structure. Its absence creates space, and space demands intention. The risk of reverting to old patterns. When conditions improve, the instinct is to relax discipline, to undo constraints, to chase delayed gratification. But the habits built under pressure weren't accidental. They were adaptive. Discarding them blindly recreates fragility. The goal isn't to stay restrictive, it's to stay aware. What pressure actually taught. Pressure stripped away illusions. It showed which expenses were fixed versus optional, which decisions mattered versus distracted, which goals were intrinsic versus borrowed. This clarity is valuable, but only if retained. Otherwise, pressure becomes wasted experience. The difference between scarcity and prudence. There's a fine line after pressure lifts. One side is prudence, the other is fear. Prudence maintains margin. Fear avoids engagement. The challenge is learning to loosen without forgetting, to move forward without erasing lessons. Why confidence must be rebuilt slowly. Confidence doesn't rebound instantly. If it does, it's usually overconfidence. True confidence is informed. It acknowledges uncertainty without being paralyzed by it. This kind of confidence grows through measured action, not declarations. The long-term advantage of those who paid attention. Not everyone who survived pressure emerges stronger. Some emerge tired, some emerge cynical, some just emerge relieved. But those who paid attention emerge calibrated. They understand constraints, they respect volatility, they value optionality. This calibration compounds quietly. How systems encourage forgetting. As conditions normalize, narratives shift. Things are back. Crisis avoided. Time to move on. Forgetting is encouraged, because remembering friction complicates growth narratives. But forgetting increases vulnerability. The system resets faster than individuals should. Why personal strategy must outlast cycles. Cycles come and go. What matters is the framework you carry through them. Do you default to leverage when conditions allow? Do you build margin when things feel good? Do you adjust early or late? These patterns determine outcomes more than timing. The illusion of control. After stability returns, Stability creates the illusion of mastery. People attribute success to skill, not conditions. This illusion leads to overextension. The wiser move is humility, not self-doubt, perspective, remembering how quickly conditions can shift, redefining progress. After pressure, progress needs redefinition, not as accumulation, but as resilience, not as speed, but as sustainability. Progress means being able to absorb change without collapse. That's a higher bar, the emotional work that remains. Even after conditions improve, emotional processing lags. Grief over missed opportunities, resentment over sacrifices, fear of recurrence. Ignoring this work leaves residue. Processing it restores clarity. This isn't indulgent, it's strategic. Why calm is a skill, not a mood. Calm after pressure isn't passive, it's practiced. It comes from clear boundaries, realistic expectations, aligned commitments. Calm doesn't mean nothing is happening. It means nothing is overwhelming. Carrying forward margin. Margin isn't just a cushion, it's a mindset. Time margin, financial margin, cognitive margin. Once you've experienced life without it, you don't casually give it up. This is one of pressure's few gifts, the quiet shift in identity. After navigating pressure, identity changes. You trust yourself differently. You tolerate ambiguity better. You require less reassurance. This isn't confidence in outcomes, it's confidence in navigation. Why this phase is rarely celebrated. There's no ceremony for endurance, no applause for restraint. The story doesn't highlight those who avoided disaster, only those who achieved spectacle. But avoidance is achievement. Stability is an outcome, preparing for the next transition. Another transition will come. Different cause, different shape, but the skills transfer. You don't need to predict it. You need to recognize it sooner, next time. That's the real advantage. The question that matters. Now as pressure fades, ask yourself, what am I keeping on purpose? Not what you're abandoning, what you're preserving. This question defines your next chapter. Closing the loop. Pressure wasn't an interruption, it was an education, one that can't be unlearned, only ignored. Those who integrate it move forward lighter, not because the world is safer, but because they are steadier. Final thought. Stability will return, then it will leave again. The cycle continues. What endures isn't the conditions, it's the clarity you carry through them. And that clarity is the true asset.